tend to have a liquidity cycle because of the business cycle, because they have to refinance the debts of the governments. And you tend to have the Bitcoin halving, which is a reduction in supply. And that's why these periods get really quite exciting.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto. We experienced a significant surge in the crypto market, particularly with Bitcoin, which saw a 150% increase. Currently, we are in the process of transitioning to what is known as crypto summer, where we expect to reach new all-time highs and witness a frenzy of activity. Bitcoin has already reached its all-time high, and although it may have broken out or not by the time this video is released, it doesn't really matter. It is common to experience some volatility before the real excitement begins. The real excitement usually occurs when altcoin season arrives during crypto summer. Please consider taking a moment to support this video by liking it, subscribing to the channel, and enabling post notifications for similar content in the future. Please feel free to contribute to the discussion by leaving your comments and observations in the comment section below. Thank you, and enjoy the video.
It's a coin flip between it going up and it going down. But what we do know is the supply of Bitcoin from the miners will halve. So over time, there's less new supply, and therefore the supply has to be met by existing participants selling. Now, considering about 60 to 80% of all Bitcoin holders don't sell, they just hold, there's actually quite limited supply around. So when you add in a kind of macro bull market, it tends to then tilt the supply-demand imbalance wildly in favor of demand. Not enough supply, too much demand. Add the ETF in, and that adds more FOMO. It's easier for people to get in. And before you know it, you start building this banana zone cycle. So the halving itself is a non-event. It's the signal that you're about to come into crypto summer, which happens to coincide with the presidential election years every time. And it also corresponds with what I call the everything code cycle, which is the debt refinancing cycle, which is the macro cycle. They're all the same thing. So you get this kind of powerful dynamic of politicians giving out free candy because they're going into an election, stimulus. You tend to have a liquidity cycle because of the business cycle, because they have to refinance the debts of the governments. And you tend to have the Bitcoin halving, which is a reduction in supply. And that's why these periods get really quite exciting.
If/when the Federal Reserve cuts rates for the first time in years later this year, what will that mean for crypto?
I think it's been anticipated by the markets. But it just, at top level, if you think of most people who've got credit card debts or mortgages or interest payments on cars, it just makes everybody's life a little bit easier. And if you've got a little bit more discretionary spending, you might be able to put it into the market. And so at the margin, it'll help. I mean, obviously, it would help a lot if rates went down to 2%. Are they going to get there or not? Certainly not this year. Maybe next year. Depends what happens to inflation, depends what happens on a number of different levels. But really, it's not interest rates that actually drive the world. It's liquidity. Liquidity is the money that the central banks put into the system, often in conjunction with the government, to try and generate economic growth or drive markets. And we bottomed in liquidity, I think, again, last time we spoke, back in November 2022. That was the bottom of the liquidity cycle. It happened to be the bottom of the crypto cycle and bottom of technology, because those are the forward-looking asset classes. And going forward, my work suggests that liquidity should continue to ease all the way into 2025. So therefore, if we've got rising liquidity against this backdrop, it should be positive. Yeah, so how I back this out is two different ways. One, I just look at the log chart of Bitcoin. That trend, you can extrapolate it, and somewhere around 2030, it'll be $1 million. That sounds as ridiculous today as it did when I first bought it at $200 and I put a price projection of $100,000. I said it's actually going to $1 million, but I'm going to discount myself for being an idiot by 90%. So it cost $200. It could go to zero at that time, certainly, because that was 2013. But my price projection's 100,000. And people said this is ridiculous. I said it's the best macro trade of all time. So the $1 million doesn't seem that preposterous. The other way I back it out is when I look at the adoption of cryptocurrency. So you use as a proxy the number of active wallets. Now, we all know that's not a perfect proxy because people have multiple wallets. But you compare that to IP addresses for the internet, start them at both 5 million. Now, people have multiple IP addresses as well. So it's very similar. It's just directionally gives you an idea. Crypto is growing at twice the speed of the internet in terms of adoption. So it's the fastest adoption of any technology and any asset class the world has ever seen. So if we just assume that growth slows, as it did with the internet, because once you get bigger and bigger numbers, it's hard to grow at such a rate. So it goes from, let's say, 175% a year where it's been trending and goes to 43% a year, which is what the internet did from year 8 onwards. Well, crypto gets to 1 billion people by the end of next year, 1 billion active wallets, and it gets to 4 billion by 2030. Well, at 4 billion, the price will certainly be $1 million. So it kind of backs out from the adoption of the technology and of the log chart, because the log chart basically is the adoption of the technology.
Bitcoin has been unable to surpass its previous peak in the last 30 days, indicating traders' hesitation at these high levels. The market is experiencing profit-taking and increased selling pressure, which is hindering any further upward movement. This cost observing the behavior, we can see the formation of a triple-top technical pattern. This pattern is characterized by 3 consecutive peaks at approximately the same price level, with 2 pullbacks in between. It is a commonly recognized pattern in technical analysis. As of April 17th, Bitcoin is currently testing its triple-top support level near $63,500. If the price successfully breaks below this support line, it may experience a decline equal to the height of the triple-top pattern. This pattern typically concludes when the price breaks below its support line and descends by an amount equal to the peak height above that support line. Based on the analysis, the target for April or May is approximately $4,650, which is a decrease of about 14.25% from the current price levels. We expect the BTC price to move towards the upper trend line of its trading range at around $70,000 if it doesn't rebound. Further decline, analysts at Stock Money Lizards observed that Bitcoin queues originate from the widely used WAF method in their recent post. Notably, Bitcoin's recent price rallies and retreats mirror the typical trends witnessed. As of April 17th, the cryptocurrency had entered a stage known as the sign of weakness, indicating a decline in demand and setting the asset up for a downward move. There is a decrease in demand, which can be attributed to the increasing cautiousness caused by the Federal Reserve's decision to maintain higher interest rates for a longer period of time, as well as the escalating conflict in Israel. AIN's Stock Money Lizards, major institutions, have temporarily halted their investments, according to analysts. They note that the inflow of ETFs is at an unprecedented low, leading them to speculate that challenging times may lie ahead for the market. Bitcoin ETTF has experienced outflows of nearly $150 million since the start of the Iran-Israel conflict on April 12th, as per data from Farside Investors. Let's back to the Raoul Pal interview.
It's difficult to know what kind of cycle we're going to be dealing with. There's a school of thought that says it's a left translated cycle, which means it goes up fast early and then peaks early. Most would finish in 2025 in December. That's normally how these crypto cycles have finished. That third year would be a December, November kind of period. So could it come earlier and peter out this year? There's definitely a probability of that. What price would that be? I would say 200,000. Something like that. And that would be, okay, that's gone very far, very fast. The most likely outcome is a standard bull market. Now, the last one we had, 2020, 2021, was actually a stunted cycle. because really the final leg never happened. We had a huge final leg in 2017 and an even more enormous one in 2013. But last time around, we didn't get one, which caught everybody off surprise, including myself. So somewhere that would be, Bitcoin gets to, let's say, 200 to 250,000, peaks somewhere between the summer and the end of the year. Okay, that seems pretty reasonable. The other probability is that we have a full bubble cycle, because now there's more access to it by the ETFs. There's more acceptance. There's more regulatory acceptance. It captures more mind share. There's like 110 million Coinbase wallets, and only about 10 million are active right now. So that number can go up dramatically. So we can see a huge participation and a final kind of belief that this is it. That could happen. And in which case, then you could see an extension to maybe 400,000 plus in this cycle. But I would give the short cycle and the bubble cycle roughly the same probabilities. I'm probably more erring towards the bubble cycle, but let's call them both 20% probability and 60% for something normal.
Pavel Durov, the founder of the encrypted instant messaging app Telegram. It is anticipated that the increasing government surveillance will lead to the development of secure communication devices that draw inspiration from cryptocurrency. In a Tucker Carlson interview on April 17th, Durv discussed the increasing suppression of private information exchange by government entities. Durv expressed concern about the diminishing privacy in the world and the decreasing tolerance of governments towards it. This trend is driven by the growing technological power of governments. However, Durv believes that this increased oversight will lead to innovations in hardware devices dedicated to secure communications, similar to how we have hardware wallets to store cryptocurrency. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.